Welcome to TradeTheABI.com. This is John. This report is for the 27th. And this is why we talk about these things. It's so important to look at what we're seeing from a reading standpoint. And we talked about this continued move of NBI white, which is a representation of short activity relative to the magenta yellow construct. And even though you had magenta above, that was a suggestion that we were going to be able to hold above and force some short covering. But without a decline in that NBI white, you still have shorts adding into this setup within it. And then they took advantage of this higher uh, price level to continue to short into it. And we saw this definitely on the intraday as we get to that one a little bit later. But as I've been warning, this move towards the 25 becomes a deadly situation below it. Uh, you end up with the cascade effect. Well, now you've got NBI white moving even further. You still have magenta over. My camera's in the way, so I have to slide over here. It's just slightly ahead of NBI yellow. Of course, this is live, so we won't know what that's going to be until the end of the day, but we'll be able to see it intraday even more clearly. But it was a clear indication when we saw the DOC as well. We saw cyan in what was very interesting with this multiple spider effect, where you see these diamonds forming, the indecision within the market, and of course then tariffs are announced, and you got the reversal of the shakeout. And I warned, if you didn't get shakeout to the positive, you'd have a continued negative. Now, my suggestion was we could maybe potentially make it up to the 50% before retracing down, and then you would be looking at, okay, am I going to end up with a higher shakeout for a divergence? Well, all we did was completely fill back everything that was popped up from the previous day, and not outside anything we look for. But what's critical here is finally seeing the steel resetting and moving down here below cyan. That becomes critical, because that's the only bull case that can be made, is where you have a reset. And especially going into the end of the month with the beginning of the new month, you would have a reset of short-term buyers that would have new cash flush to jump in, and potentially give shorts more opportunities to short it in higher pops. So NASDAQ even cleaner. You can see that complete rejection right there, as we were both trailing up with the NBI white and magenta coming down. And the same effective readings from Spider. You don't quite have the same reset yet, but you also didn't have the same increase in shakeout readings from NASDAQ to S&P 500. So those were real differences, and we knew that the NASDAQ had been weaker in general overall. Now, of course, the people say, oh, but it hit the 38%, that was the okay, fine, but no. It was clearly within the readings. There wasn't enough that was going to, you really would have had to have a nice drive up of magenta continuing to ride with it in order to sustain things. And it still can, because it's still above yellow. Even at this particular stage, much closer here, you're like less than a half point difference between yellow and magenta. So, but it's rising, and that's better than not. Where you really get the turnover from a daily standpoint, if that blue dips below gray in this particular case, then you're going to be seeing some major swoon. And of course, you get the nut jobs thinking about the tariff thing being inflation. I just don't know what economic school these people went to. Really don't. It boggles my mind, the decay and understanding of how economies work is sad for the future, because it just means they just don't have a clue as to what is going to be taking place, and that just makes them completely wrong in all their assessments, and then they blame other things for it. It's very confusing. So treasuries, from that standpoint, they're going to be back and forth. The Fed, they're going to have to make a decision at some point, to get off the fence in that, but they're going to be late. They're always late, and then they're always late for too long. Whether it's when we talked about trying to stamp down inflation and raising rates earlier, they didn't do it, and then much later, and then they eased rates in the middle of continued rise in prices, was some very interesting political behavior, without question. But this becomes the issue: oil. Let's see, Trump can drive this down somehow. It's going to continue to delay any benefits whatsoever. In the euro, yeah, they're happy about peace, but no, they're still planning for war. So yeah, there's that. not going to go well. MBI White leading on that one, so it's going to continue to trail. It's already still been, but they bought time. They saved themselves for a while, and potentially they'll get another bonus with thinking that. But this is going to devastate their economies with the tariffs because they're taking in all those tariffs when it comes to U.S. goods going in there, and they're just not expecting it. It's going to have a huge dampening. The worst situation for Germany ever. They're talking about wanting to break their budgets and go with all the spending, and now all of a sudden you're going to have your largest corporations suffering even further. Yeah, it's bad news all around. Gold, excited by this, because again, you don't have a change in oil. You also have this potential viewpoint that it's going to be a negative for the U.S. economy, whatever. So pumping gold didn't really have the similar effect from a crypto standpoint. Again, that's more related to the Nasdaq, as I've talked about, than it is general excitement about fiat currencies, that kind of thing. The shift has been significant, and it's been over time. We've seen it develop the correlation. ETH disaster. I'm not worried about that one. So before we were talking about this, and it's just something I always keep going over and over, and why I was pointed out the other day as well. The positive extremes. You don't want to ignore these. You have to put down the line where it is for the low, and that way that when you do get your selling, where your expectation was. Now, earlier when we were looking at the beginnings of MBI White starting to take a root here, we suggested the 50% would be your typical expectation at the beginning of that, but then the fill of positive extreme. Well, let's see what the low was. 45, and what was it here? Oh yeah. I have to put my glasses on to see that. Oh my god, that's so embarrassing. The low was 57.39 to be precise. Here we got to 43. So it's a full fill in my book, considering we usually look at 80% of it. But the point being is we came right back to that level. Not a surprise. And MBI White led through most of the morning on that. The magenta below the 25 wasn't until a little bit later that it popped back up. That gave a little bit of support right in between, and you can still see MBI White leading, but magenta is still above 25 at this particular case. It could be enough to hold it in place, but a slight dip below there, and you're definitely going to be looking at a move back towards 0% again. So that's as clean and easy as it gets to see it from a even tighter time frame. 5 minute here. Yeah, it was ugly from the moment the morning started. No change whatsoever. It's one of those easy short situations where you have to think about it. You just keep lowering the stop. And typically, I usually follow 50% at that particular stage, because at that point you know that you're going to have a complete turnaround and you don't get caught in the little whipsaw, but every little pop was a new opportunity to short again. So it just depends on how active you want to be. And so then in the post market here, to try and counter some of that negativity, and a lot of people, potentially dealers, getting caught on the wrong side of things with all the extra put action, killed obviously all the call buyers. And now you have puts well into the upside, so you might need to lift things a little bit to try and save yourself a little bit, so the week isn't a complete disaster. So we'll look for a bit more of this continued volatility range, and while they think it's uncertainty, there's really nothing to be uncertain about. Things are moving in the correct order. It's just going to take a while for it to actually resolve itself, and it could be as much as optimistically, I was talking middle of the year, but now it may be closer to the end of the year. The delays they're getting with the judicial rulings and things like that, you're just not going to see the effective move, at least with speed and velocity. It'll start to build later, as we saw the beginnings of it with durable goods orders rising, and that's a signal of the broader investment, and that could be more significant going forward, particularly as some of these companies start to want to tool up for creating factories and stuff in the U.S. So we'll see how it plays out. As always, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.